Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Wednesday, April 22nd, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In this video, we'll explore Russia's new crypto regulation, Bitcoin's market surge, Ethereum's technical outlook, XRP's institutional future, DeFi security issues, Japan's blockchain bond initiative, and HTX DAO's Web3 vision. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now, with that out of the way, let's dive in. Russia's State Duma has taken a significant step by approving the first reading of a comprehensive bill aimed at regulating digital currencies. This bill, titled On Digital Currency and Digital Rights, seeks to bring formal oversight to the crypto market. It defines key legal concepts like the circulation of digital currency and digital rights, setting the stage for a more structured environment. The bill introduces 5 regulated participant categories, including exchanges and brokers, all of which will require licenses and oversight by the Bank of Russia. Notably, while it classifies digital currency as property, it maintains a ban on its use for domestic payments, reserving the Russian ruble as the sole legal tender for such transactions. However, it does allow the use of digital currencies for foreign trade and cross-border settlements, potentially aiding Russian firms in navigating international sanctions. This legislation is set to take effect on July 1st, 2026, though some provisions will roll out later. It still faces 2 more readings before it can be signed into law by the president. Next, let's discuss the recent movements in the Bitcoin market. Bitcoin's price recently soared above $78,000, marking a 2.2% gain within 24 hours. This surge was mirrored by Ethereum, which rose by 2.7%, and a broader crypto market increase of 2.3%. Several factors contributed to this rally. Short squeezes were triggered as Bitcoin breached the $75,000 mark, and strong inflows into Bitcoin spot ETFs, totaling approximately $1.8 billion over 3 weeks, provided additional momentum. Institutional buying has also played a significant role, with Michael Saylor's strategy surpassing BlackRock as the largest institutional Bitcoin holder. Moreover, easing geopolitical tensions, such as the US extending a ceasefire with Iran, have further supported this upward trend. Despite this optimism, analysts caution that the rally might be short-lived unless Bitcoin can maintain its breakout levels between $78,000 and $83,000, supported by strong liquidity and altcoin participation. Now for Ethereum's technical analysis and price prediction. Ethereum, priced around $2,330, is currently exhibiting 2 bullish technical setups. The first is a weekly accumulation pattern, supported by a rebound in the Relative Strength Index, RSI, and the 200-week Simple Moving Average, SMA, which historically precedes upward movements. Additionally, Ethereum is forming a long-term wedge compression pattern with higher lows, facing key resistance near $3,242.87. Analysts suggest that a confirmed breakout above this level could see Ethereum targeting $7,409.85, with longer-term Fibonacci projections pointing to $5,172, $8,429, and even $15,688. However, the need for confirmation and holding key support levels is critical, as the current structure supports a higher overtime bias but remains conditional on these factors. Moving on to XRP. Crypto commentator John Squire recently highlighted XRP's potential beyond its current price volatility. XRP is increasingly seen as a valuable asset for cross-border payments and liquidity provision, which could drive institutional adoption. As demand for XRP rises, its scarcity is expected to increase, putting upward pressure on its price. Positioned as a bridge asset in the Internet of Value, XRP aims to facilitate faster and cheaper cross-border transfers, addressing inefficiencies in traditional finance. Ripple's infrastructure, coupled with post-2025 regulatory clarity following their SEC legal battle, could enhance institutional confidence and adoption, making XRP a strategic long-term investment. Next, let's address the ongoing security challenges in the DeFi space. Recently, Volo protocol on the Sui blockchain suffered a security breach, losing approximately $3.5 million from vaults holding WBTC, XAUM, and USDC. The breach led to the freezing of all vaults, with coordination from the Sui Foundation to secure the remaining $28 million in total value locked, TVL. This incident follows the $292 million Kelp DAO exploit, which exploited Layer 0's cross-chain messaging protocol. DeFi has lost over $10 billion to hacks, with bridge exploits contributing $2.9 billion of this total. Notably, the Kelp DAO hack is linked to North Korea's Lazarus Group, responsible for multiple heists totaling $578 million in April 2026. These events highlight the need for improved security measures, as institutional capital flows into DeFi have yet to bolster security sufficiently. Let's now turn our attention to Japan's innovative blockchain initiative for government bonds. The Japan Securities Clearing Corporation, along with Mizuho Financial Group and Nomura Holdings, has launched a proof-of-concept pilot to manage Japanese government bonds as digital collateral on the Canton Network blockchain. This initiative aims to enable real-time collateral movements and cross-border settlements, testing the legal compatibility of tokenized bonds within Japan's financial laws. Japan's government bond market is massive, with issuance exceeding 1,000 trillion yen, or approximately $6.28 trillion. This pilot is part of Japan's broader Financial Services Agency Payment Innovation Program, which seeks to integrate traditional finance with digital assets. Additionally, Japan is tightening crypto regulations, planning to classify crypto as financial products subject to insider trading bans and disclosure requirements. Finally, we explore HTX DAO's vision for the Web3 ecosystem. HTX DAO recently launched the HTX Genesis Hackathon in Hong Kong, backed by a $10 million ecosystem fund to support AI and Web3 convergence projects. This initiative emphasizes a full-cycle pipeline from development to listing, with Justin Sun highlighting AI agents as the next major interface for Web3. The HTX DAO ecosystem includes the HTX Exchange, governance through HTX DAO, and various DeFi layers like Tron and JustLend. The $10 million fund is strategically dispersed based on innovation milestones and commercial growth. The hackathon aims to attract around 100 global development teams, offering resources and support. This initiative marks a shift from traditional hackathons to infrastructure nodes fostering systemic Web3 growth and mass adoption. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.